Hello, everyone, and greetings of the day. We are really glad to share with you the digital space for learning and sharing. We have Mr. Vishal Menon today, who will be sharing his practical experience about corporate tax. And we welcome you all. This is going to be the third episode of our series of webinars. I think we are still receiving people. We are still expecting more people to join in. But let's start the webinar formally now. Welcome everyone and greetings of the day. And we are very happy to share the digital space with all of the people who wants to learn and share. Today, today's session is going to be about corporate tax in UAE. We have Mr. Vishal Menon who will be sharing his practical experience with us about corporate tax in UAE. I request you all to stay with us till the end of the program. It is going to be a very interesting conversation between Mr. Allen and Mr. Vishal. They will be sharing the frequently asked questions with us. Mr. Vishal will be answering in the light of his own practical experience. So from there onward, I would request Noor to give a brief introduction about Adam Global and its services. Over to you, Noor.
Ladies and gentlemen, hello, dear valued members and partners. Thank you for joining us today. This is Noor, your business consultant at Adam Global. I am delighted to welcome you all to this webinar session. Please allow me to spare a moment to welcome our diverse audience. السلام عليكم ورحمة الله تعالى وبركاته. سيداتي سادتي الكرام، أعزائي الحضور، نشكركم على حضوركم معنا اليوم. معكم نور مستشارة أعمال لدى شركة آدم جلوبال. شكرا لحضوركم الندوة معنا. Chers mesdames et messieurs, bonjour, chers partenaires et membres. Merci de nous avoir rejoints aujourd'hui. Je me présente, Nour, votre consultante en affaires chez Adam Global. J'ai l'honneur de vous accueillir parmi nous pour ce séminaire en ligne. Adam Global was founded in 2002 and is operating in the market for over 21 years. Adam Global's aim is to provide high-quality services by accredited and regulated professionals. Our mission is to increase constantly the productivity of our client businesses. The values we believe in are transparency, honesty, respect, speed with accuracy. We have a presence in more than 100 countries worldwide. We are present in Europe, both Americas, Asia, South America, Africa, Australia. Adam Global provide professional services. We are provider of an exceptional suite of high quality services in market entry, such as company formation and PRO services, whether it's mainland, free zone, offshore, if it's a branch or a subsidiary, or even for company liquidation. We have compliance and legal services, such as secretarial services and economic substance regulation, HR services. We are specialized also in intellectual property, trademark registration, patent, and advisory. Taxation, since Adam Global is a registered tax agent with the Federal Tax Authority. We also provide auditing and accounting services with our team of experts. Behind the success of Adam Global, we have our founder and chairman, Professor and Dr. Tahir Akhtar, backed up by Mr. Shanavas Americano, our managing director. Adam Global has a vast network of qualified and accredited professionals. We have accountants, lawyers, medical practitioners, consultants, corporate secretaries. Each of them is leading in their own field. Adam Global is providing excellent services to a variety and numerous industries. Here are a few of our major clients. Thank you
Okay,
for joining us today, and I leave the word to Mr. Fahd.
thank you very much, Noor. It was Noor introducing our company services, and in our effort to improve on the experience of our diversified audience. Noor introduced the company in English, Arabic, as well as in French. So now I would like to introduce our today's expert, Mr. Vishak Menon. Mr. Vishak Menon is a chartered accountant from India. He also holds IFRS diploma from UK. He has overall 14 years of experience and in which he has spent 7 years serving UAE market in various industries. He is currently working with Adam Global Auditing and Taxation team as an assistant audit manager. We also have Alan. Alan will be moderating the session with Mr. Vishak Menon, and at important occasions, he will be highlighting the frequently asked and received questions. Over to Mr. Allen.
Thanks, Fahad, for the introduction of introducing me and Vaishak. Uh, Vaishak, over to you to start in with the topics.
Yes, Sharon. Good morning. Good morning, each and everyone. And first of all, I need to thank Fahad for introducing me. So today we are going moving forward to the session. So today in my session, I am planning to discuss about these three topics, which is most relevant. So chargeability of UAE corporate tax. So what are the, who is going to be come under the corporate tax law? And how it's what is the rate is going to be charged and what on what amount which corporate tax will be applicable. So moving forward, we will discuss all those things. So we are moving to the first slide. Uh, Okay. So we are coming from the very basic question, what is corporate tax? So from my practical experience, people are asking too much questions. So I am getting salary, I am getting a rental income in my personal capacity. So shall I charge to the corporate tax? So some people are also asking me, on what corporate tax will be applicable on profit or on sales. So people still have some confusion regarding on what corporate tax will be applicable. So I will tell you, this is the decree law from the UAE government, Federal Decree Law number 47 on 2022. This is the decree law is going to charge business and the business income in UAE. So one thing I want to repeat again, the corporate tax is applicable on the income or profit of the business, not on the turnover. So I repeat again. So turnover is corporate tax is going to applicable only on the profit, not on the sale. So as per the decree law number 47, the UAE government is going to tax the profit of the business in UAE from most probably from 1st January to 31st December. In some jurisdiction, corporate tax is also known as corporate income tax. In some jurisdictions, also called as business profit tax in some other jurisdictions. So we are moving forward. So this is another confusing question which is happening in the market. When this corporate tax become effective? So, as per the UAE corporate tax law, UAE corporate tax regime will become effective from the financial starting 1st June 2023. So most of the people, so some people are following different financial years. Some of them following June to December. Some of them are following from April to March. Some of them January to December. So people are confused. So the law is saying that if your financial year starting after 1st June 2023, your corporate tax applicability will begin. So I think it's better to discuss two, three examples. So in the example one, we can discuss over here. If you see this example, in this case, a business have a financial year from July to June. So in this case, it is clear that, so see that law, it is corporate tax will applicable from 1st June 2023. So in this case, his financial year is starting from July. So in this case, from 2023 onwards, this company is liable to follow the corporate tax law. So when we come to the next example, see in this case, this company is following January to December. That means their corporate tax will applicable from next January onwards because their financial year is starting from January. So January means any financial year starting after June only. So their financial year will start from January 2024. So their corporate tax will applicable from 1st January 2024 onwards.
Hi, Vaishak.
Yes,
Thanks
Alan.
for the two examples that you've given.
Okay.
But we have a question out here which a client has asked, which says, do we need to change the financial year as per the corporate tax law?
Actually, no need. Companies are following, so most of the companies are following one particular financial year. I think let them follow the same financial year. For example, for a juridical person like LLC companies, civil companies, they have memorandum of association. So in the memorandum, it should clearly state what is the financial year of that company. So companies should follow. So because of this corporate tax law, none of the company need to change. They can follow the financial year what they are following, but their applicability will come after the financial year starting 1st June 2023. I hope
Thanks
the
for the
answer is clear
yeah.
for the people. So
Thanks.
moving
And
forward, okay.
in regards to your introduction on corporate tax,
Mhm.
there's another question that we received is that will UAE corporate tax replace VAT in UAE?
No, Alan. Actually, the VAT is different. Corporate tax is different. Corporate tax is a direct tax as well as VAT is a indirect tax. So VAT is different. Corporate tax is entirely different. VAT is we are charged on the sale of the company. So VAT on the sales and corporate tax will come under the net profit. So both are entirely different things. So corporate tax never ever replace VAT. So people should think like that. UAE VAT is different. UAE corporate tax is different. So one is
Yeah.
direct tax, other one is indirect tax.
Thank you so much.
Okay. So we are moving forward. So what are the category of person will come under the corporate tax? So there are two category under come under the corporate tax. One is taxable person and one is exempted person. So we will discuss moving forward. We will discuss who is taxable person and who is exempted person. So we will discuss who is become the taxable person now. First, the first taxable person will be juridical person. Juridical person means companies, all kind of LLC, single owner LLC, one person LLC, civil company, all type of legal entities. So like companies, see, I already mentioned here, companies, legal entities incorporated in UAE, as well as any permanent establishment of the foreign legal entity also will come under the tax bracket. On the other side, natural person. In terms of natural person, any person is doing any business activity. That means if any natural person have any trial license for doing the business, they are also required to register for the corporate tax, but they are liable only when their turnover exceeds 1 million. So this benefit is only for the natural person. So if it is a juridical person, if, irrespective of any turnover or any profit, everybody should register and should follow the corporate tax law. In terms of natural person, like any sole establishment doing any business like freelancers, so any rental, anything. So if their turnover exceeds 1 million, then only corporate tax law will applicable to that natural person. Go to the next slide. So obviously, these are the exempted person, of course. So most of the things are on from the government side. So all government entities and all government control entities are exempted from the corporate tax. Like extractive, non-extractive natural resource business, they already have a emirate level taxation, so they are exempted from the corporate tax. Qualifying public entity like charity, only qualifying some conditions are there. So these people are also exempted from the corporate tax, like qualifying investment fund, pension security fund, all government related charity funds are exempted from the corporate tax. So one more thing I want to discuss that for exempted persons also it's required to register for the corporate tax. So there are list of conditions. Then only they will become exempted. For claiming this exemption also they want to require to register as well as they will follow the corporate tax law as well. So the law is saying that they are not blindly exempted. So there are a lot of conditions to follow to get the exemption from the government. Go to the next slide, please, Ajay. So these are the rates. On what rates government is going to tax your profit? So we can categorize this one into two: free zone person as well as other than free zone person. So government is saying that for the free zone person, if you are deriving qualifying income, your tax will be 0%. If you have earning any non-qualifying income, government is going to charge 9% of this qualifying income. Actually, this free zone person is a very broad concept. So it is a very hot topic also. So we will conduct another webinar on especially specifically for this free zone person. So we will discuss more about this free zone person in a coming webinars. So when we come to the other people, other than free qualifying phase one person, up to 375, there is 375 profit, there is 0% tax. After 375, the taxable will be 9%. I think we can explain through a example
Uh,
here.
Yeah,
Yes, Alan?
Veshak, sorry to interrupt. So, in regards
Okay.
to this that you have mentioned about 0% and 9%, we have a
Mhm.
query out here
Mhm.
wherein our client is asking is there a registration threshold for corporate tax?
No, Alan. Actually, there is no threshold limit except for natural person. I already discussed. If a natural person, that means sole establishment. For sole establishment, their turnover is more than 1 million only, they required for the registration. If the turnover is less than for 1 million, for them only they are exempted from the registration. In all other cases, any juridical person or a accepted person, except this scenario, all people should register regardless of the turnover, regardless of the profit, whatever it is. You have any trade license, you should go for the registration.
Yeah, thank you.
Okay, so we are coming back. So this is a small example how to calculate the corporate tax payable in UAE. So this is a only hypothetical example if a business for us, for example, January to December, that company is earning taxable income. That means profit of 1 million during a particular financial year. So I will tell you how to calculate it, this 9% for a non-free zone company. So the in this case, total income is 1 million. So already discussed up to 375,000. There is no corporate tax. So we are deducting this 375 from that 1 million. So the taxable income exceeding the exemption limit is 625,000. So in this case, this company is liable to pay 56,250 dirhams as a corporate tax for that particular year. See, 625,000 into 9%. So 1 million minus exemption limit of 375,000, the balance should be paid at 9%. I hope it's clear for everyone. So I'm moving forward to the next slide. So now we are moving forward the taxation of resident and non-resident person. How? So there is a category in the corporate tax we already discussed. There are some taxable person. Under the taxable person, there are two categories: resident taxable person and non-resident taxable person. Their taxability will be different. For example, I will tell you for a resident taxable person, his global income is taxable in UAE. On the other side, for a non-resident person, his UAE income only taxable in UAE. I will tell you one example. I have a company in, I am a resident person. I will tell you what is the resident in the coming slide. I'm telling one example. I am a resident in UAE. I have business in UAE as well as I have business in India. I have business in Pakistan. So if I am a resident person, the global income, that is from income from India and income from Pakistan, also liable to pay tax in UAE. So if you have any double taxation treaty, we can claim the double taxation relief and all. But the crux is, if you are a resident taxable person, your global income will taxable in UAE. On the other side, I am a company registered in India and I have a branch in UAE. My all things are going to happen in India. I have only small branch. So in this case, I am a non-resident person. So my UAE income only taxable in UAE. So my Indian income will not taxable in UAE if you are a non-resident person. So we will moving forward. I will tell you who is a resident taxable person, who is a non-resident taxable person. So as per the corporate tax law, the law is saying that these are the person who is a resident taxable person in UAE. So I will go through one by one. The first one is any juridical person that is incorporated or otherwise established or recognized under the applicable legislation of the state, including a free zone. So any company incorporated in UAE is a resident taxable person, including free zone. So all LLCs, all one person company, all sole establishment who incorporate in UAE is a resident taxable person. Their global income is going to taxable in UAE. So in this clause, most of the companies like LLC company, sole establishment, civil company will hit this clause. So all these companies are will treated as a resident taxable person. So when we are going to the second point, any juridical person that is incorporated or otherwise established recognized in a foreign jurisdiction that is effectively managed and controlled in the state. I think it's better to explain through a example. So actually, it's I have a company in UK, but I have I have a branch in UAE. So I have a branch in UAE. So I incorporated as per the UK law, but I have a branch in this UAE. So I am a resident of UAE and I am staying in UAE for a long time. So I am taking decision. That means managing and controlling all this UK company as well as UAE company in UAE. So in this case, I am a resident person because all the management, all the control are I am doing from the UAE. So this is the crux over there. Any company registered outside UAE, but managing and controlling is happening in UAE. In this case also, your company will, company or some other legal entities will treat it as a resident person. So when we go to the next point is any natural person. Now we are talking about the juridical person. So that means any LLC companies and all. Now we are talking about the natural person. Any natural person who conduct a business or business activity in the state. That means any sole establishment who is doing any business activity. That means he have any trade license. He is also a resident taxable person in UAE. There is one more exemption given to them, as I discussed earlier. If their turnover is less than 1 million, no need to register for the corporate tax. If sole establishment turnover is more than 1 million only, you have to register for the corporate tax. So in this case, in these three, we'll treat it as a resident person in UAE. Their global income. I repeat again, global income is taxable under UAE corporate tax law. So one more clause is there. Maybe in the future the government will add more conditions. That's why they put a fourth condition. So in the future maybe they will add more condition for the resident person. I hope you
Uh,
people. Yes, Alan.
Yeah, Vaishak, in regards to this, we have a question.
Mm-hmm.
So when you talk about natural person,
Mm-hmm.
so does a natural person's citizenship or the visa status have any impact on their tax status?
No, Alan, actually, visa status, although citizenship is not a point here. See, it's clear in the law itself, incorporated. So you have a trade license in UAE. Whatever be the visa status, whatever be the nationality, you have a trade license in UAE. So they are liable. They will come under the resident person. Their global income will taxable over here.
Yeah,
So
thank you.
citizenship and visa status is not a relevant factor here. So I'm moving forward to the non-resident person. Can you go to the next slide? So not understand, person. In this law, they are saying in 2 points. One is any permanent establishment in this one I already explained in example. I have a company in India and I have a branch in UAE. So all the control, as you told, the control and management is from India only, not in UAE. So management and control in UAE, then you are a resident person. If your management and control is out of UAE, then you are a non-resident person. So these are very important. We are saying management control. It's very tough to prove. Actually, we are saying management and control. We have to prove to FTA. If you want to prove as a non-resident person, we have to prove to FTA our management is control is outside UAE. So if our key people like CFO, CEO is working outside UAE, then we can prove. If these people are in UAE, it's very tough to prove the management and control is outside UAE. And the one more point they're saying that any state source income. Actually, the person is not residing in UAE, but he is getting some revenue. For example, he have any 3-4 flats, he's getting from rental revenue. So this is a state sourced income. So in this case also, this person is a non-resident person. He is liable only for UAE income. The worldwide income is not taxable here. If you are fulfilling these two conditions, so your UAE income only taxable in UAE. So they put another clause also in maybe in the future the cabinet will add more conditions over here. As of now, these two are the conditions for non-resident person in UAE. I hope you understand the concept of resident and non-resident person. Now we are moving forward to the next topic, tax group. So tax group. So here also people have some confusion regarding the VAT. First of all, I need to tell you VAT is entirely different law and corporate tax is entirely different law. So tax grouping means, for filing the return, so I have three companies A, B, and C. So for the taxation purpose, we can consolidate all these three and we need to file a one return. So in VAT, there is a separate law is there. So conditions also different. But in corporate tax, this is we are going to discuss about the what are the conditions for forming a tax group. That means I have a company A company, B company, and C company. I want to consolidate it all together, and I need to file only one tax return. So here I am going to discuss about the what are the conditions to consolidate all these companies into a one single entity. So on the left side you can see only UAE resident juridical person and the parent company must hold 95% in subsidiary directly or indirectly in share capital, voting rights, and entitled for the net asset. So these are the major two conditions for forming a tax group. The one is see it is a resident company. So in this case, it's very clear that any non-resident company which we discussed in the previous slide, they are not eligible to come under a tax group. Plus, should be a juridical person. So any sole establishment or other than LLCs or sole establishment also is not allowed to come under the tax group. So we are concluding that only a resident person as well as should be a juridical person. Only these two people can form a tax group. And the one more the major condition is company parent company should hold 95% in subsidiary. That means, if, for example, I will tell you if A company is there, B company is there. For both companies, I am owing 100%. I am a single owner LLC. In A company, I am owing 100%. The B company also, I am owing 100%. In this scenario, I can't form a tax group because they are saying that A company should hold, not if it is a common ownership, it is not possible. A company should hold 95% in the B company. So, company should hold 95%, not the owner. So, if for joining the for forming the tax group, these are the major two conditions. One is should be a resident person, one should be a juridical person, and one company should hold 95% of any of all of these three in the B company. Then only we can form a tax group. So, some other conditions are also there. Any exempted person, what we discussed earlier, any qualified person who is claiming 0% also should be excluded from the tax group. So exempted person and so qualified phase one person also not allowed to form a tax group. And other conditions are financial year. If A company is following January to December, B company is following April to March, this is not possible. If you are forming a tax group, every company should follow the same financial year as well as the same accounting standards. So like accounting standard means IFRS. So if you want to club together, these are the conditions: should be a resident person, should be a juridical person, and should hold 95%. This is the major condition for forming a tax group.
So, in regards to this, Vaishak,
Mhm,
there's a question that is
mhm,
asked wherein
mhm.
they are saying, can foreign entities be included in the tax group?
No, like that already discussed here. You should be a UAE resident person. The law is very clear. So if he's a, I think foreign entity, I assume that that foreign entity is not a resident person here. Their
Mhm.
management and
Yeah.
control is outside UAE. So if your management and control is outside UAE, then they are a non-resident person. So non-resident persons are not allowed to come under the tax group.
Thank you.
I hope it's clear. So
Yeah.
moving forward, yeah. So how to form a tax group? I will this is a small chart I will give you. What are the conditions for forming a tax group? I am assuming that all the conditions which we discussed in the previous slide is fulfilled. So there is a company called A company, it's a parent company, and company called B company. So all the conditions which we discussed in the previous slide is fulfilled here. So what they want to know, a parent company should make a application to FTA saying that A company and B company should form the tax group. So if your application is given to FTA within a time frame, FTA will approve. If FTA approve, then you can form a tax group called A and B. So if you form a tax group, A company and B company can consolidate the financial statement. They need to file only one tax return for the corporate tax purpose. On the other hand, already ABC or ABC tax group coming under the tax group, they want to split into a different company. Say any of the conditions of type long or met, they have to apply to the FTA that we are not complying the all the conditions. So the parent company is responsible to apply to the FTA for the cessation of the tax group. If FTA approve, again they will become a individual companies, A company and the B company. So in this case, A company have to file a separate return, B company have to file the separate return. So they are two different entities. So we can discuss some of the advantages of the tax group. If you form a tax group, what are the advantages? So the main advantage is parent company should consolidate all the financial statement. As we discussed earlier, there is a three company A, B, and C. So if these three people are fulfilling that conditions and their application given to FTA, if FTA approves, these three companies can consolidate their financial statement into a single financial statement, and they are liable to file only one return. The three companies no need to file the return different. They have to file only the consolidated financial statement. So their burden will tax compliance burden will come down. So they have to deal only one financial statement. And the other hand, parent company is liable for doing all those compliance with the FT. The
Yeah.
other
Thanks
one
for
is
answering. Sorry to interrupt, but thanks for answering that question because we had received one question as well now where they asked him that will the tax group need to prepare a consolidated financial statement? So I think that
Of course.
answer is
Yeah.
given. Thank you.
Yeah, of course. Yeah. So only one financial statement is required if they are coming under a tax group. So the other benefit is offsetting of tax loss. For example, A company, B company, C company is there. If C companies have a loss, so they can net off this loss with the other company because we are consolidating all the financial statement. So if any of the subsidiary having the loss, we can set it off with the other people income. So, but some conditions are there. So subject to the conditions, we can offset the tax loss of a subsidiary company with the other company's income. The another main benefit is there is no transfer pricing compliance between the group members. Because if a company is, so it's in a group, if it is a group company, so there are so many intercompany transactions. So transfer pricing is going to be hit them from next year onwards. If you go for a tax group, so if you go for a tax group, we can eliminate all the intercompany transactions. Then the transfer pricing regulations will not hit these members. So it is a main. This is the main advantage for the tax group. So on the final point, we can transfer the asset and liability within the group without some condition, without booking the sale profit or sale on the asset side. So one point I want to discuss with the people. I already discussed there is a exempt limit of 375,000 for a tax. So I want to show one example. There is three companies: A company, B company, and the C company. So A company is earning 500,000, B company is earning 300,000, and C company is earning 200,000 loss. So I already discussed if it is a tax group, we can consolidate it all their income. So in this case, this tax group have a total income of 600,000. That means 500,000 plus 300,000 minus 200,000, it will come as a total income as 600,000. So in this case, these three companies will get only one exemption limit. So we can't take it. In this case, there are three companies. So in this case, we can't take 375,000. We will get only 375,000. So if it is on the other hand, these companies are registered not in a tax group. Each company will get separate 375,000. If they will come under the tax group, they will get only 375,000. In this case, 600,000 is the total revenue. So we are deducting only one exemption limit. 375, we are reducing the 375,000. So net taxable income is 225. Accordingly, we have to pay 9%, 20,250 on the 225,000. So this is going to be end of the session. If you people have any question, please let me know. I will answer
Yeah.
to that questions.
Thanks a lot, Vaishak, for the insights on the three good topics chosen. So we have few questions, and I would like to take them up. So we have one question from Mr. Vishal Pandey. He asks that what is the owner's salary that can public should assume towards expenses?
Actually, there is a, I already told you there is a transfer pricing rules. As per the transfer pricing, the law is saying that owners can take the salary on the market value. So there is a cap. So owners cannot take their own salary. So there is a cap. There is called market value. For example, I am from a auditing industry. So I'm owner of a auditing company. I can take the salary what is similar industries taking in my same company. For example, I want to go to the market. I want to check that what are the similar auditing companies owners is taking. Only to that extent only I can take the salary. That means we have to make a study that what is the market value with the same industry and the same companies are taking. So actually, it is a very toughest part for to get the market value. But this is a question, but we have to go with the law. So salaries can take on up to the market value. So FTA, for example, you are taking 100,000 per month. In the other case, your similar companies is taking only 50,000. For 3 4 companies are taking only around 50,000. So 50,000 is more. You are taking 50,000 more compared to the market. So this 50,000 will dissolve by the FTA. So they will tax this. They will add back the profit, and you have to pay tax on the excess amount you charged. I hope you got the
Thanks.
answer. Yeah.
I hope Mr. Vishal is happy with the answer. We got another question, which is what records should a company keep for corporate tax purpose?
Actually, corporate tax law is saying that companies should prepare a financial statement. Financial statement includes balance sheet, profit and loss account, and the no stock and so on all. So for and all the supporting documents to this financial statement. For example, we have paid some rent, we say paid some salary and all. We should have the all supporting documents. This is what law is saying. So we have to prepare the financial statement. Financial statement include financial balance sheet, profit and loss account, equity statement, and all the notes of accounts. To prove these figures, we need all the supporting documents like invoices, bill, whatever be the supporting document. We should have the documents to prove the figures in the financial statement.
Thank you. We have another question from
Mhm,
Mr. Iskandar, where
mhm.
he says that are there any incomes or expenses that should not be included in a taxable base?
Actually, yeah, there's some example dividend income, capital income is some incomes is not included. Mainly is dividend income, capital gain income, but subject to some conditions. There are a lot of conditions is there. I will send a detailed mail to him regarding the conditions all after this meeting. So it's a broader topic, so it's not easy to answer in a single moment. So I will send the details to Mr. Iskandar after this webinar.
Thanks a lot, Mr. Iskandar, for your question, and we will get back to you over email. There's another question which says, how long must I keep my records for UE corporate tax purpose?
Actually, as per the corporate tax law, you should keep for 7 years. 7 years from the end of the financial year. For example, for the 2024 records, you have to keep for 7 years. That means 2032, 2031, up to 2031, you should keep this record. That is, I'm repeating again, there are total 7 years. 7 years, you should keep the all the records from your side.
Okay, that's good. Thank you for that. There's another question from Shintu Matthew, which says that corporate tax registration is mandatory for all companies, even if their profit is less than 375K.
Yeah, that's I already told you. There is no threshold limit on regarding to turnover or profit. If you have a trade license, you should register. Only exemption is to only sole establishment who have the turnover is less than 1 million. In all other cases, whatever be the profit, whatever be the turnover, you should register with the corporate tax authorities.
Okay, I hope, Mr. Shintu, you've got your answer. There's another question we'll take from Mr. Jain. He said that he's asking, it is compulsory to form a tax group or is it optional?
No, not compulsory. It's up to the management discretion. So you can decide we would to go to a tax group or standalone balance sheet. So you to compare which one is the benefit. If you can for the form a tax group, maybe you will get. I told some transfer pricing benefit you will get. So intercompany problems will not be there. So you have to make a study. It's up to the discretion of the management. It is not mandatory. It is optional. Up to the management.
Mr. Kapiljan, I hope you've got your answer. There's another question from Mr. Mark where he says, do financial statements have to be audited for the purpose of CT returns?
Actually, the law is saying that if your turnover is more than 50 million, then only audit is required. I repeat again, if your turnover is more than 50 million in a year, then only audit is mandatory. So, but if it is a less than 1 million, but you have to prepare the financial statement as per the international financial reporting standards. So you have to prepare the financial statement, whatever be the turnover and all, but you have to should be audited if your turnover is more than 50 million.
Thanks. I hope, Mr. Mark, you've got your answer. We are receiving a lot of questions. I'll just take a couple of them more. But rest assured that all your questions will be reverted back via chat or via email. Also, we'll be displaying our email ID as well, the contact number also. So please feel free to get in touch with us, and we are more than happy to help you out with your queries. Another question from Mr. Pramod. He says our owner has two companies with 100% ownership.
Mhm,
He is a UE person. We need
mhm.
to register separate corporate tax registration.
Actually, I want to know what is their legal status. It is a one-person company or a sole establishment.
It's not mentioned. It just said UE person.
Okay, if it is a juridical, that means one-person LLC. If it is a juridical person, you have to register separately. If there is a three company, you have to register for three company. If these three companies is a sole establishment, he can go for a one registration under his name if it is a sole establishment.
Okay, Mr. Pramod, I hope you've got your answer. Since we are doubtful of the question, please feel free to email us and we'll get back to you on this. Uh, Mr. JK, there's someone as JK who said, is there a deadline or a date for the CT registration?
Actually, the law is saying that you can get registration before filing the tax return. So there is no cut-off date. There is no fixed date. So law is saying that before filing the tax return, you should get registered. So the time limit for filing the tax return is 9 months from the end of the financial year. For example, I will tell you you're following January to December, then your financial year, first financial year will be January 24 to December 24. So you have 9 months to file the corporate tax return, means you have time up to September 2025. So you should get registered before September 2025. That means before you are want to file the return, you should get registered. So there is no cutoff date. So this is the law is saying before filing the return, you should get registered. That is the only condition now as of today.
Yeah, thanks. I think this also answers to Mr. Mark because even he asked the same question after the physical year. What is the time frame of a filing returns? So I think Mr. Mark, this answers your question as well. I guess we've answered maximum questions that we could. We would be reverting back to all the other questions via email or on chat. Over to you, Fad.
Okay, thank you very much, Alan and Vishak. It was very informative session. So I revert back to our prestigious guests who are there to listen to today's webinar. We are really glad to have you all on our digital space. This was our third webinar of the series, and we are really happy that with the passage of time, we are gaining momentum and we are receiving more guests in our webinars. The contact details of Adam Global are already there. You can call us on the given number. You can also send us an email through info@adamglobal.ae. You can also visit our website in order to see in detail what are the other services that we are offering. So we have received many registrations, and through those registrations, we have also received your contact details. In order to facilitate you for getting any specific queries answered, I will send an email to all of you with the appointment booking page link of Mr. Vishal. So through that appointment booking link, you will be able to schedule a one-on-one session with Mr. Vishal, and in this way, you will even get that very specific answer to your very specific query. So once again, I'm really glad and thankful to all of you for sparing time and joining our today's webinar and with newer resolutions. And we hope that in January we will get together once again with a new topic with a new expert. So thank you very much for joining today. Thank you very much.
Thank you.
Thank
Thank you so
you.
much.
Shukran.